Hi guys, I'm back with another video, and yes, actually wearing the same shirt I wore on my previous video. Well, that's because I believe in branding. And in today's video, I'm going to show you how I escaped my loss in trading. And stick with me to the end because I'm going to be showing you the secrets on how to never be a user in trading ever again. So stick with me to the end. So now as you can see the trade setup now, it was a CPI, it was CPI news I was trying to trade. So 30 minutes before the news, I was already planning my setup. So what did I see? So now first there was an uptrend forming on the 1 hour time frame. So I was making low, a high, a low, a higher high. And then we were potentially supposed to make a low to quietly make a higher high. So that was my plan, to catch that low and then catch that move. So that was my plan. So when we were under, we broke, we, when we were under this resistance level, it was a resistance level, then we broke and then we were meant to retest. So normally I use confluences to trade. I don't just trade based off one setting thing I know in the market. I use conferences. I believe that the more the conferences on the trade, the better that trade will be, the higher probability that trade will be. Because in trading is based on probabilities, not because what you know won't actually work. You get, the market will always do what it wants to do. So it's all based on probabilities. So what I saw here was, normally I mix trend lines with horizontal support and resistance. So what I saw there was a horizontal support, a horizontal resistance at first, then we broke it, and then we came back to retest it. So we're potentially supposed to go up. And normally I've seen these setups, let's go to the smaller time frame. Normally I've seen these setups happen time and time again, that whenever this did not even close, or so when this can broke past through this level, this support level, I was like, this trade won't happen because number one, I was trading before the news, which was gambling, and I didn't want to break a trading rule just to make money. We get. So that was the number one mistake I was making. And the second mistake I was making was this bearish candle. This candle already engulfed this whole move. Let me put it. This candle already engulfed this whole move that happened here. So it was already clear that bears were in the market. Then a second bearish candle now broke past through this support level that I was supposed to buy from. So that was what made me not to enter that trade at that point. So as I saw the trade setup, I was like, no, I'm not going to break a rule just to make money on this particular trade setup. It was not worth risk taking on this particular setup. So what I did was I just left the trade, and I just what I did was I left the trade just to run, and then I let the news come. So my original plan on this trade setup was to actually sell if we look at the daily time frame. So on the daily time frame, yes, I know we are uptrending, we need to buy, but if you look at the pattern that I'm seeing here, it's forming a double top, and whenever there's a double top, there's mostly a reversal. You get. So that's the very, very strong reversal pattern that you should pay attention to. So you need to pay attention to these things. So there's a strong reversal pattern that was happening here, which was the end of the top. So that's why you cannot buy into a resistance level. You must always sell high. You must always sell high and buy low. So I was just following the normal rules of the market. Always buy low. You must always buy low. You cannot be buying high at these high points. So you must always wait for price to come down before you buy. So anything that you're doing in the market, you have to do it with reason. Don't just do it. Don't just do it just because you want to make money or you think that, oh, this might likely happen. You're not thinking. You're it's based on reasons, it's based on probabilities. So the probability of buying was very, very low just because it's trending up. So it doesn't make sense for you to buy just because it's an uptrend. Yes. So I know I was trading against the trend, which was risky, but that risk had probabilities. It had good reasons to actually think to sell. So my original plan was to actually sell. If we go down to the smaller time frame, on top of that reversal, you can check the RSI. The RSI was overbought at this video. And whenever we are overbought, it means that buyers have been buying so much. And then whenever this black candle crosses under the red candle, it means, or whenever the black moving average crosses under the red moving average, it means that buyers are now losing control and sellers are stepping into the markets. But I don't use this as a standalone analysis. I use it as confluence, as part of my confluences. They are what I add to judge a trade. That's why it's based on probabilities. So adding that, I just knew that we're going to sell, we're going to drop. So as if that was not enough, we now had a downtrend, which was part of the whole move. So you see, everything was just making sense. Everything was just adding up. Every single analysis was just adding up. But before that, before the downtrend, we had a solid area of interest. Let me show you. So when we're above, we're buying. When we're above, we're buying. Above, we're buying. Above, we're buying. We broke under, we retested it, and then we sell. And then now, at this point, we're all like, yeah, what will we do? We should be selling. So that's what just makes sense. Everything is just aligning up, and everything should make sense. You get. So what I did here was I wanted to place my sell orders here at this point. I wanted to place my sell orders at this point and then sell it back to this support level. Let me show you the support level. I wanted to sell it back to this support level that happened here. So it was a good trade. It was all nice and it was all setting up. But one thing that you should know about trading is you should never chase a trade. You should never ever chase a trade just because you feel like, oh, price is almost close to your point of entry, or the trade might reverse, or you feel the trade might reverse. Never ever chase a trade. That's one rule that you should always keep in mind. You should never ever chase a trade. So I wanted to short this market, so price did not come to my entry point, unfortunately. I was thinking the CPI will buy first. Then once it buys, then I'll have the opportunity to sell after the news. But that didn't happen. Instead, price came all the way down to this point. And then when I saw, you already know what happened. And then when I saw this, I said, let me just leave it. Price might actually come to this zone, then I'll sell off. But that didn't also happen. So it's just mixed. So that did not also happen. So I just left the trade, and that was how I avoided the loss. And now the first secret to avoid losses in trading is, first, you should always identify the mistakes that you are making on every trade. Before you take any trade, always identify if I am making any major mistake. If I am making any mistakes that will cost me losing that trade. Trading is based on probabilities. Don't let anybody deceive you. Trading is not thinking, it is probability. Is it the probability that it will go up or it will go down? You get, so that's the probability. So you should identify whether you are entering at the wrong time, or you are not following your plan, or you are not obeying the amount of confluences you need to enter that particular trade. You should identify those common mistakes so that you won't be a newbie trader and lose anyhow based on bad trades. And then the second secret to avoiding losses is you should journal it. When you actually appoint the trade first, you should journal it. Why would you journal it? Because when you journal it, you are keeping record of the trade that you made, and you are looking, okay, out of 10 trades that I'm able to avoid like this, what are the mistakes that I'm actually making on those trades? Now, what you want to do, this third secret is the most important. What you want to do on this third step is you should now identify the mistakes that you're making and identify the things that you are doing right. Now, what you want to do is you want to replicate the things that you are doing right and eliminate the things that you're doing wrong. That is what you want to do, because you don't want to continuously do the wrong things, and the right things, you don't even know what you're doing. You're just trading anyhow. So you want to replicate the things that you're doing right and eliminate the things that you're doing wrong. And the best way you can do it is journaling those mistakes, journaling the trades themselves, and actually reviewing it every day, because journaling without reviewing is just nonsense. So you have to journal, review the mistakes, and then try to eliminate those mistakes. Make sure that on the next trade, you know that yes, these mistakes have actually cost me trades before, so I shouldn't be doing them again. So I hope you gain value from this YouTube video, and I'll see you in the next one.